Well, there's a ton of corporations and actors that adopt Bitcoin that I didn't even know about, that did it for reasons I'm unaware of, and of course, you know, the classic example are all the OGs that adopted Bitcoin because they came out of Argentina and they were victims of currency collapses, and I didn't live, you know, through their bank collapses, through their currency collapses. So I would say the beauty of Bitcoin is it is a solution to the economic problem faced by 8 billion people and 400 million companies and who knows how many entities, and all of their problems are different, all their circumstances are different, and it offers it's a different solution for someone living in a war zone than it is for someone living in Shanghai, than it is for someone living in North Korea, than it is for someone living in Germany, than it is for someone living in Nigeria, and even is different for you in Nigeria 5 years ago versus you in Nigeria 5 weeks ago. So dynamically, everybody's economic challenge is evolving, their circumstances are different, and it offers everybody this opportunity to solve their problem with technology. And the reason it's successful is because it's this massive parallel shared nothing network where you've got hundreds of millions of people thinking independently for themselves in their own local circumstances without asking for permission from anybody else to think. So for me to presume that I know why someone did it or I understood the problem, it's like no one person really understands the entirety of the human experience. It's just too multifaceted, too high bandwidth, and generally the best solutions. The reason Bitcoin works is because someone that you don't know with a problem you don't have in a place you've never been to settles upon Bitcoin as a solution, and then you're walking down the street in the random place, they're like, and they think, oh, we are comrades.
Yeah.
Right? It's like, I don't know you, but I had a different thing, but we solved it with a common network and a common asset and a common protocol. And you might not even have time to figure out what their problem is, but it doesn't matter. They're helping you. You're helping them. Right? It's just one of the most magical examples of human cooperation to further the human condition and the civilization that I've seen. And so it's like, do you want to be immortal, destructible, you know, or do you want to fly with laser eyes and be indestructible? And it's like, you have to take the compound B. And it may be a little bit scary. It is volatile and it's bubbling. It's orange. You have to drink the orange fluid. But I think it's that simple, really. And it's happening. And what you're seeing is people are like, I want to be a superhero. Why wouldn't you want to be a superhero?
Is what you just said really also applicable for nation states? Is this really the strategy of the Trump administration to use Bitcoin to stay, basically the world's top dog?
I think that Trump realizes that Bitcoin and the crypto industry in general is incredibly powerful politically and economically and technically, and he attributes a fair degree of his political success to the support of the entire community. So they're very enthusiastic. Every cabinet member is enthusiastic. The Trump administration's enthusiastic. They're going to harness it technically and economically, and that will progress. And I think, the Genius Act, the launch of of stable coins, the Bitcoin Strategic Reserve, all of those things are indicative. The U.S. went from grudging acceptance of Bitcoin, dragging their heels on everything else, and being fairly indifferent to the opportunity as of a year ago, to enthusiastic embrace of Bitcoin, enthusiastic embrace of all the digital assets industry, and they went to leading the industry, and now they're kind of in the driver's seat. They're probably the most progressive, and other countries are going to have to keep up.
But would you say that we can apply the playbook, acquire Bitcoin, laser eyes, indestructible? Can we apply that to nation states?
Yeah, sure. It just takes clarity, and it takes conviction, and it takes consensus. The challenge with nation states is they have like 10,000 people on the board of directors, and I mean, technically, how many senators, how many Congress persons, how many political actors? So, in my experience, it only takes one member of the board of directors who's a conventional thinker to block the entire company. And so generally, the problem with corporate adoption is one conservative or traditionalist on the board cripples the company. In a country, you have a lot of parties and a lot of concerns about that. So the obvious winning move is if I ran a country and if I had the power, I would print my currency, buy Bitcoin. And after I finished with that, I would borrow money, sovereign debt. I would print debt and I'd buy Bitcoin. But I don't have a country. It's above my pay grade. And countries have a lot of other dynamics. There are a lot of other political actors. You've got your unions, you've got your political parties, you've got the IMF, the World Bank, you've got the opinions of your neighbors, you've got your opinions of your citizens, you've got your opinions of everybody under the sun in the media. And so I'm not here to tell you what they can do. I'm an idealist. That's what I would do if I could. But neither am I critical. The truth is, there's a million people that don't go 150% all in on Bitcoin, and I don't judge them for it. Maybe they had a reason to not do it, right?
Or they didn't see the need. That's what you always talk about, and I think you're very right with that.
Or sometimes somebody sees the need, but they can't build consensus. Like a CEO sees the need, but he can't convince the board of the need. Or you're the mayor or the president of a country and you see the need. That doesn't mean that every member of the Senate and the House and your cabinet sees the need. So it's a political process. You have to build consensus.
But if the US really goes through with the strategic Bitcoin reserve, that is a signal to every other government in the world that is something that we have to look at. That is actually even a signal to Apple and Google and Facebook and Amazon that they have to look at Bitcoin, isn't it?
Yeah, leadership matters, and if you have one leader, they create air cover for people to come behind them, whether it's a nation or a company or an individual.
You said about the bear market, right? Bitcoin corporations. What's going to happen to them in a possible bear market, or is there not even going to be a bear market? Because I think you said in one interview, you said winter is not coming.
Yeah, I think that there's one group of people, and they tend to be traders, and they're charters, and they like to, fill up their charts and their computers with lots of data, and then they like to back calculate and back solve and do regression models, and they try to fit cycles, and they try to use whatever happened in the past to predict what happened in the future. And I think that idea of using data from the past to predict what happens in the future, it works in a closed system, in an adiabatic system, where there's no new energy, there's no new structural elements introduced. And so I get it for predicting a pendulum or a swing or something like that, right? Or maybe tidal forces acting on the Earth for the last 5 billion years because the moon hasn't changed. But if a new moon came along, right? If all of a sudden a second moon and then a third moon came along, and someone was looking at all the tidal patterns for the past 100 years, you would say, are you crazy? There wasn't a third moon 100 years ago. So if the structure of the system changes, if it's not a closed system, when it's an open system, when new developments are forming, I don't think you can look back. So for example, the crypto winter took place because massive structural leverage and rehypothecation. You stacked up, people took, they issued Luna token, and then they issued, UST. They issued Terra stacked on Luna, and then they traded UST for Bitcoin. And then when the Luna collapsed, the Terra collapsed, the Bitcoin got panic sold, and that created a rippling wave of redemptions and it bankrupted FTX and Genesis and BlockFi and Celsius. And they had daisy chains, a whole set of credit instruments on top of tokens, which were 100-to-1 levered, backed by air. Okay, and if you have that structure where you have, if I took a public company and I capitalized it on a security with 1% of the float outstanding, and then I took another public company and capitalized it on the second public company with 1% of that float, and if I took a third public company and capitalized it on the second, and I would have 1,000-to-1 or 10,000-to-1 lever, and there's $1 million backing $10 billion of market cap, then when I crush the one in the middle, everything collapses and you get your crypto winner. And that's what we got in 2023. You had massive structural leverage that was backed by air tokens from all of these crypto cowboy unregulated exchanges. They were making loans they never should have made, backed by collateral they never should have taken, right? And so you get a 75% drawdown. Well, what's the difference today? Well, first of all, they all got wiped out, right? All the companies went bankrupt. They're all in jail. There is no FTT token. There is no Terra Luna token, right? Anybody stupid enough to give you a $2 billion loan in return for $1.5 billion of yo-yo token, like, where are they, right? They're either in jail or they're bankrupt, or they've quietly withdrawn from the industry. So the industry grew up. It grew out of that crypto cowboy phase. The capital in the business today is much more permanent capital. Like, so we spend $40 billion plus buying Bitcoin, and our use case is to hold it forever. Okay, that's 40 billion of real capital. I don't think there was never 40 billion. I don't think anybody ever invested $1 billion in any other token in 10 years. So it's a different capital structure. You have institutional investors with permanent money. You can't lever up 20-to-1 and daisy chain 3 times. You've got a functioning options market, options on MSTR, options on IBIT. The options are damping the volatility. So if you're looking at the market today, the observation is there's more permanent capital, there's less leverage, it's not even possible to create that leverage, there's more derivatives, there's less volatility, there's a use case, long-term capital, and today there's 150 public companies that are all vying to use Bitcoin as long-term capital, and 4 years ago, there was one public company that was trying to figure out what are we going to do with Bitcoin. And so the market's changed, the structure's changed, the capital has changed, the leverage has changed, the volatility has changed. It's reasonable to expect drawdowns and run-ups, but not of the same nature that you saw, when the industry was unregulated offshore. And the real source of volatility is the cross-collateralization to yo-yo tokens, right? Yeah. And what's happening is, as there's less of that and there's more institutional buying and selling and trading, the volatility and the nature of it starts to drift more toward conventional equity assets away from the crypto assets of 2017.